Hello traders, welcome to the video. So in this video I'll be showing you a very quick strategy that you can use to trade the boom and crash market easily. So this strategy I'm about to show you works best on the boom 1000. So you can also trade this strategy on the boom and crash 900. Don't worry, I will show you examples in both the boom 1000 and the boom 900 so that you will understand how it works. In this strategy, we are not cashing spike, we are trading the retracement. And one thing I want you to know is that this retracement that we will be trading is very accurate. You just need to pay attention to everything I say so that you will avoid fake out and then you can make a lot out of the strategy. So if you look carefully, I am on the 1 minute time frame and this is crash 1000. So in the crash market, we are buying to the upside and we are counting just 5 candles. That is the highest probability candle that we can cash with this strategy. If you look carefully, I have 3 indicators on my chart. I have the moving average, I have the RSI, and I have the RVI. The combination of these indicators help us to get a very nice entry in this strategy. Just to know that no strategy is 100%, so but if you pay attention to what I say, this strategy will give you over 80% win rate. But it is very accurate. So don't worry for the indicator. I will show you settings after I explain the strategy. And for the zoom level, there is no fixed zoom level for this strategy. You can zoom in, zoom out as you want. So one thing you should make sure is that your chart is clear so that you can easily see your chart. So what are you looking for in this strategy? The moving average helps us to know when the market is in uptrend or downtrend. So we want to make sure that the candles are above the moving average. That is very important. This blue is the moving average. When the candles are above, is indicating to us that the market is in an uptrend, and then we will be able to cash our moves to the upside. So you want to see market spike to the downside but did not touch the moving average or break the moving average to the downside. That is what you should note. Then you want to see a cross below the 30 level. So as you can see over here, there is a cross. Then you will enter your buy and count just 5 candles cross around here. You enter a buy, count your 5 candles before you see another spike to the downside. You can see there is a spike also did not touch this level but did not enter into the 30 level, so we did not have a trade in this situation. So if we go up a bit, this is also another one. You see spike but did not touch or cross the moving average. That is the most important key point over here. So then you wait for the cross. You have the cross around this point. You enter a buy, count your 5 candles, and then you are out. Then immediately after that, you have another entry over here. Spike to the downside, did not touch the moving average. Then you enter your buy, count your 5 candles, and then you are out. Hope you understand what I'm saying. Continue to see the movement. Spike to the downside. The relative vigor index enters into the 30 level. You see a visible cross at this point. You enter a buy, count your 5 candles, and you're out. But if you look over here, market crosses, but it crosses above the 30 level. So you have no trade, so you avoid this long spike to the downside. That is why you must wait for this RSI and RVI before you enter, because some people will think just the moving average is enough. The moving average only is not enough for this strategy. So if you are not careful in this situation, spikes to the downside, you enter a buy, you won't be able to count your 5 candles before market wipes out your account. So you should be very careful. You see over here, spike but enters into the moving average, so we have no trade. The same thing also over here, spike to the downside, enters into the moving average, so market can continue to go down. So once we see the spike touches the moving average, we have no trade. Sometimes it may even cross and still give us our entry, as you see over here, but we must stick to the rule. That is the most important thing. So now let me go to the bull market and show you some examples over there. So this is the boom 1000. So here, what are you looking for? As we all know that the bull market spiked to the upside. So for us to catch the retracement, we want to make sure that the candles are below the moving average. So for the crash market, the candles is above the moving average, while for the bull market, the market is below the moving average. As you can see over here, this is a very perfect scenario for our strategy. Then we see over here there is a spike, there is no cross in the RVI. So in the RVI and RSI, we look into the 70 level. For the crash market, we look into the 30 level. So over here you see the 70 level above the 00. So we see a spike to the upside, did not touch the moving average. We see a cross above the 70 level. We enter a sell, count our 5 candles, and then we are out. We see also there is a spike to the upside. We have a cross above the 70 level. If you look carefully, it is above the 70 level. We enter a sell and count our 5 candles. Hope you understand what I am saying. Here we have a spike, did not touch the moving average, but we have no cross above the 70 level. So in this situation, we have no trade. Then the spike we see next touches the moving average. Then we wait until we see a spike below the moving average. So these are also good examples over here. We have a spike, did not touch the moving average, but the crossing did not happen inside the 70. Then we have a spike again that crosses above the 70 level. So we take our cross 2 over here, we count our 5 candles, and then we are out. If you think that you can count 10 candles, I think you have seen situations where it gives you several candles and then spike to the downside. So it is better to have higher win rate than to be targeting long distances. So if you have over 90% win rate, this helps your psychology and you will be more confident in entering a trade. So let's go to the boom and crash 900 and let me show you some examples also. So if you look carefully, this is the crash market. Like I said, you want the markets to be above the moving average. So you see over here, we have a spike to the downside that did not touch the moving average. So once you have that, we wait carefully for a visible cross. We have a visible cross around this point. Then we enter a buy and count our 5 candles, and then we are out of the market. This spike and touches the moving average. So we wait for when market is also in a uptrend, like you see over here. This is a very perfect example of what I am saying. So here we see a spike, we see a first spike, but did not enter into the 30 level. Then we see another spike to the downside that enters into the 30 level. Then we wait for the cross, enter a buy and count our 5 candles. You can see that this also works. Spike, spike, spike that crosses 5 candles. You see that this one also works perfectly in the crash 900 market. So let me go to the boom 900 and show you 1 or 2 examples also. I want markets to be trading below the moving average. Okay, that's not what I'm saying. So you see over here, spike, spike, spike to the upside that did not touch the moving average. Then we have a visible cross around this point. If I take my cross 2, this is the cross. Enter a sell and count our 5 candles. Just very easy like that. It is as simple as ABC. We see in the current market, we enter a sell and count our 5 candles, and then we are okay with that. So now let me show you settings to my indicator. First thing you do is to click on this indicator icon over here. So like I said, I have 3 indicators. I have the moving average, the relative vigor index, and the relative strength index. So to select the moving average, click on the F icon on the main chart. This is your moving average. Click on that. Make your period to be 200, shift to be 0, method to be exponential, apply to close, style to be 3 pixels, select color of your choice. After that, click on save. So to select the relative vigor index, click on the F icon on the main chart again. Scroll down a bit. This is relative vigor index. Click on that. Make your period to be 10. Add V style to be 3 pixels, signal line style to be 3 pixels, select color of your choice. After that, click on save. To select on the RSI, click on the F icon on Indicators Windows 1. Scroll down. This is your RSI. Click on that. Make your period to be 1. Apply to close. Style to be 1 pixel. Select color of your background. So if your background is black, select black. If it is white, select white. As you can see, I'm choosing white over here. So for the levels, click on this pen icon over here. Click on this add to add level. Type 30 and 70. Make your style to be 2 pixel and select color of your choice. After that, click on save. If you follow my settings correctly, your chart should look exactly as what you see over here. So after this, I want you to go back on your chart, backtest this strategy, go as far as you can in the boom and crash 900 and 1000 market. See how many times this strategy plays out and how many times it fails. Then after that, I want you to go on your demo account also and trade a live moving market to see how you can get a perfect entry for this strategy. So if you find this video helpful, don't forget to like this video, subscribe to this YouTube channel, turn on notification bell so that you get notified anytime I release a new video. You can also check out my other video that are displaying right now on your screen. Thanks for watching.